Let's get the final big economic data point of the week on UMich with Rick Santali. Hey, Rick.
Yeah, this has a whiff of stagflation to it, folks. University of Michigan sentiment and all the inflation numbers, the preliminary set, it could still change. 55.4 in headline. We're expecting a number well north of that, and rear view mirror 58.2, so sequentially lower, lowest since May of 25. 61.2 on current conditions, same scenario. Less than expected, less than last look, sequentially lower, also the lowest since May. If we look at expectations, what lies ahead? Well, the scenario doesn't change. 51.8, also the lowest since May. This follows 55.9. So there's your weak consumer confidence. Now, let's look at inflation. 4.8 expected, 4.8 remains. But that doesn't dismiss the fact that it's still the highest level since June, although I do think surveyed inflation kind of runs afoul of logic in certain instances, considering it was way up in May at 6.6. And finally, the 5 to 10-year look, 3.9. That's about 0.5% more than expected. It's 0.4 more than the rear view mirror, and 3.9 to find a higher inflation. You're going back to June when it was 4%. We started out the year at 3.2%. The recent low watermark was 2.8, and that was in March of 24. So I'm surprised we're not getting a little bit more lift on the long end of the market, which didn't spend much time under 4%. It was like a beach ball underwater. It popped right back. Matter of fact, right now, we're getting close to unchanged on the week. We saw the last week at 408. Right now, hovering at 406, and 406 is up 4 on the day, down only 2 on the week. We want to pay close attention to how we close, especially after what now looks to be developing on the annual chart as a double bottom on a closing level, basically right around or slightly above 4%. Sarah, back to you.